In a resale property market chilled by cooling measures, rentals emerge supreme. On today's show, we look at the trends currently governing Singapore's private rental market. Plus, we go on location to District 2 to learn why the suburbs are hot and Core Central is not. Next on XTV with your host, Mark Loon.
Good day, I'm Mark Loon. Welcome to XTV's detailed look at Singapore's private rental market. I'm here enjoying a cup of coffee and a delicious croissant at the Tiong Bahru Bakery on Eng Hoon Street. In April, there were about 476 resale transactions. At the same time, there were an estimated 3,202 units being rented. This is roughly a 7-to-1 ratio in favor of rentals. Clearly, during this period of cooling measures, the action is in the rental market. On today's show, we will dive deeper into the rental market and break down the trends. Specifically, we will look at the market seasonality and where people are renting. But first, let me remind you of where rents stand today. If you go to srx.com.sg/price_index, you can track the SRX property index for non-landed residential rentals. We update it monthly, and you can learn more about our indices in the SPI white paper. According to the SRX index for non-landed private residential rentals, overall rental prices in April was up by 0.2% after reaching a 27-month low in March. Compared to the peak rental price observed in January 2013, rents in April are still down by 5.4%. Breaking down the respective regions, Rest of Central posted a 0.5% price increase. Core Central and Outside Central softened by 0.6% and 0.2% respectively. Now that we've caught up on the numbers, I'll have Sam Baker to join me to break down the rental market. Sam is the Chief Executive Officer for the Singapore Real Estate Exchange, SRX. Good morning, Sam.
Good morning, Mark. How are you?
Well, I see you're armed with a cup of coffee.
I'm all fueled up to have our discussion.
Okay. So, Sam, let's start off with how the resale and rental markets differ.
Mark, I say there are three major differences between the resale market and the rental market. First, most residential rental leases in Singapore are 2 years. This means that landlords and renters are always in the market trying to understand pricing and negotiating. In contrast, most people purchase property much less frequently, maybe 2 or 3 times in their entire adult lives. Second, historically, pricing has been less transparent in the rental market as compared to the resale market. This is true for both landlords and renters.
But that has changed thanks to technology and the members of the SRX.
That's correct, Mark. Singapore's leading estate agencies trade rental information on SRX Enterprise, a digital real estate marketplace. Using an application called Agent Connect, they can instantly access rental information on both HDB and private properties. If we select residential transactions, we see a location-based search bar. We can search by location, building, street, and project. In this case, we will search by project. On the screen, select the project of interest. You will see 4 categories of project information: latest sales transactions, rental information, sales listings, and general information. Select rental information. First, you will see official information from IRAS, the tax authority. You can see real-time rental transactions and public rental information from URA. However, the public information does not have specific unit pricing. To get specific unit pricing, select real-time rental transactions. There you can see the actual rents paid for individual units. For example, the top unit was rented for $3,500 on 28 April 2014. The third unit was rented for $3,400. The agent can then scroll down, reviewing the project's rental history and selecting comparable units for pricing.
So Sam, in addition to unit level rents, SRX will also be providing agents as well as consumers more tools to determine rental prices. Am I correct?
Yes, Mark. During the first week of June, we will launch our Rental X Value. People will be able to generate market estimates of rents for both HDB and private rentals. Our computers will take into account the current market conditions to propose a fair rent. The agent and his or her client can then use Home Report to settle on a fair rent.
Before we get to the third difference between the resale and rental market, let's take a short break from this technical discussion and check in with Angela To. She's in the field speaking with real estate agents in order to find out what they think about today's rental market.
Sounds like a plan, Mark.
Hi Mark, I'm now with Francis Pang of PropNext and right now we are standing at Spottiswoode Park. Hi Francis.
Hi.
So what trend do you see in the rental market?
Well, I see that the rental market for the second half of the year and the next year will be more newly completed projects. And I foresee that these rental market expectations from the owner and as well as the tenants will have to adjust accordingly. The rental market actually now is affecting owners have higher expectations. However, they have considered to match on the tenants' expectation so that both parties have a balance.
Okay Francis, thank you so much for your time.
Thank you very much.
Thank you. So Mark, you're up.
Thank you, Angela. Okay, Sam, to summarize, the rental market is different from the resale market in that it is more active because of 2-year leases. Yet it is less transparent in terms of pricing, although the SRX is solving the issue. So what is the third difference?
The rental market is cyclical. In other words, it follows a predictable pattern. As you can see from this graph, there is a clear cycle or pattern to the rental market. The vertical axis is the number of transactions contracted, and the horizontal axis is the month. The end of the year typically sees relatively slow months, and then the beginning of the year is a build-up to the prime contract months of July and August. Note that people are actually looking in June as well, but won't sign contracts until July or August. The market tapers off as we approach September and head towards Christmas. We then see another build-up at the beginning of the year towards the summer months.
So that cycle seems to coincide with the school holidays, Sam.
Exactly, Mark. Home ownership in Singapore is very high. According to SingStat data, it typically hovers around 90%. This means much of the rental market is dependent on foreigners. The typical expatriate is much more likely to move to Singapore during the summer months. It's a more natural time to transfer jobs and to set up a new home.
So then, what is the impact on price?
As you would surmise, price will follow the demand and volume. If we overlay the SRX price index onto the rental volume graph, you can see that when demand is lower, there's downward pressure on rent. When demand is higher during the up months, there's upward pressure on the cost of rentals.
So it seems to me we can summarize the cycle into 2 rules for the rental market. Rule number 1, if you are a renter, look for homes during the down market so you can take advantage of relatively lower rents. Rule number 2, if you are a landlord, better to start renting in July and August.
That's correct, Mark. Landlords certainly benefit if their lease contracts coincide with July and August.
Okay, so stay with me, Sam, because I want to ask you about other trends in the rental market. But first, let's check in back with Angela To.
Hi Mark, I'm with Anthea Yeo of PropNext and right now we are standing in a penthouse of Lumia. Hi Anthea.
Hello, Angela.
Hi, so what trend do you see in the rental market?
Actually, right now there's an oversupply. Definitely, tenants are spoiled with choices, with so many brand new properties in the market. But the strong demand still hovers around District 1, 2, and also those condos that is like right at the doorsteps of the MRT. That is still moving well. But for the older condos, it do take a longer time to be released. Yes.
So Anthea, how have the cooling measures impacted the rental market?
The cooling measures actually means a lot of the buyers and sellers who are holding their properties can no longer sell it easily because most of them want to hold for 4 years. So most of them has converted into renting instead, leading to more supply in the rental market as well.
Okay, Antia, thank you so much for your time.
Thank you.
Now back to Mark on location.
Thank you again, Angela. So, for the final segment of this show, let's put some numbers behind this overarching trend of rental activity moving away from core central.
Sure, tenants are clearly migrating to the rest of core central and outside core central in search of more affordable rents. This dampens rental prices in core central while driving them up in other regions. This table breaks the rental market into 3 major planning regions. CCR for core central region, RCR for rest of core region, and OCR for outside core region. It shows the change in prices from the first quarter of 2008, which was before the global financial crisis, to the end of first quarter 2014. According to the SRX Rental Price Index for private non-landed, rents in CCR are down 1.9% from its pre-crisis peak. CCR consists of high-end areas like Orchard, River Valley, Bukit Timah, Holland Road, Harborfront, and Sentosa Cove. In contrast, rents in the rest of Central Region, or RCR, and outside core region, OCR, have exceeded their pre-crisis price peaks by more than 8%.
Then, based on the table, as tenants are leaving core central, rents there are declining. As people leave, they drive prices up in other regions. This is a rebalancing of the rental market. So why is this occurring? I thought that core central was a desirable place to rent for expats because they can easily get to downtown.
Historically, that's been true, but economics are taking over. The global financial crisis caused renters to tighten their budgets. Meanwhile, employers used the financial crisis to significantly reduce or eliminate housing allowances for their foreign employees. Also, the expansion of the MRT has made Singapore more accessible to renters, and so that the renters now have more options from which to choose. Let's check out this table of savings. The amount of savings in rent by going outside core central is quite remarkable. As a result, the MRT is opening up a number of new areas in which to rent and save money. As you can see, renters can save 17% renting in the rest of core region as compared to core central. This is down from the pre-financial crisis of about 28%, but the savings is still significant. You can save a whopping 37.9% by renting in outside core region as compared to renting in core central.
So Sam, how long do you think this rebalancing of the rental market will last?
As you can see from the table, savings are coming down as demand from migration drives RCR and OCR prices up and core central prices down. At some point, assuming supply remains relatively constant, migration will slow as savings become less attractive for people to move outside of the core central. However, it's difficult to imagine that this reshuffling of the real estate market will not last for quite some time. Today's significant rental savings and the expanded infrastructure of the MRT make it much easier and faster to migrate to the suburbs.
Well, that's all we have to spare today. We have unfortunately run out of time. So thank you for joining me here today in the Tiong Bahru estate.
Anytime, Mark.
And this concludes today's show. One takeaway is that the rental market is the biggest game in town as long as the cooling measures are in full force. Also, we are coming up on the peak season for rentals, July and August, and we expect to see renters continuing to seek more affordable housing outside of the core central. Please join us next week when we reveal the top 5 performing new launches during the cooling measures. Then, join us during the first week of June as we unveil the X value for rentals. For the first time ever, you will be able to calculate market rental prices at the unit level. From all of us at XTV, thank you for watching and have a good day.